If you were to start a business in California today, you would owe the state $800 before you even made a single cent. And California isn't even number one on the list. Today, I'm counting down the 10 most expensive states to start a business in 2026. And if yours shows up, don't worry, stick around. At the end, I'll tell you exactly what you can do about it. Let's get into it. Number 10, Massachusetts. Massachusetts has a $500 LLC filing fee just to get started. That's nearly 10 times what some other states charge. Then there's a $500 annual report every year after that. Think of the annual report like a check-in. You pay the state to confirm your business still exists. Most states charge under $100 for it. Massachusetts charges 5 times that. Number 9, Hawaii. Hawaii has something called the General Excise Tax, or GET. Most states tax your profit, what's left after expenses. Hawaii taxes your gross revenue, meaning every dollar that comes in before you've paid a single bill. And it applies to multiple points in the supply chain. So if your product passes through a few hands before reaching the customer, it can get taxed more than once. This is a structure you won't find in most other states. Number 8, Vermont. Vermont has a corporate income tax that runs between 6 and 8.5%, which is steep, but not unique. What's unusual is the business entity tax, a flat $250 charged every year to LLCs, partnerships, and S-corps, on top of regular annual report fees. Most states don't have a separate flat tax like this on top of everything else. Number 7, Minnesota. Minnesota's annual renewal can actually be free, which sounds great. But the corporate franchise tax sits at 9.8%, one of the highest rates in the country. The franchise tax is basically a fee for the privilege of doing business in the state, calculated as a percentage of your income. At 9.8%, it's significantly higher than the national average, which hovers around 6%. Number 6, Washington. Washington has no traditional corporate income tax, which sounds like a win, but the state makes up for it with the business and occupation tax, or B&O. Here's what makes it unusual. It's charged on your gross revenue, not your profits. So even if your business has a bad year and barely breaks even, you still owe Washington money. Most states only tax what you actually make after expenses. Washington taxes the whole top line. The next 5 are where it really gets painful. If you've been telling yourself your state is probably fine, you might want to wait on that. Number 5, Maryland. Maryland doesn't hit you hard at formation, but the ongoing costs compound over time. There's a personal property tax, which is a tax on the physical assets your business owns, like equipment, furniture, and inventory, on top of your regular filing fees. Most states have this in some form, but Maryland's combination of a complicated tax structure, annual fees, and personal property taxes makes the total cost of operating there higher than it looks on paper. Number 4, Connecticut. Connecticut has a corporate tax rate of 8.25%, which is already on the high end, but some companies also get hit with an additional 10% surtax on top of that. A surtax is basically an extra charge layered onto your existing tax bill. So if you owe $10,000 in corporate taxes, that surtax adds another $1,000 on top. Compared to states with no corporate income tax at all, like Wyoming or Nevada, Connecticut is a tough place to keep overhead low. Number 3, California. Remember this one? California has an $800 franchise tax that most businesses owe almost immediately after forming, and it's due every single year regardless of whether you're profitable. That franchise tax is essentially a fee for the right to operate in California. On top of that, LLCs with higher gross receipts pay additional fees tied to revenue, and California has one of the highest minimum wages in the country, which drives up operating costs before you've even hired your first employee. Number 2, New Jersey. New Jersey has minimum gross receipts taxes, which means even small businesses pay a baseline amount regardless of profit. There are also annual report fees, and larger companies may owe an additional 2.5% corporate transit fee. This is a surcharge that goes towards funding public transit infrastructure. Most states don't have a transit-specific tax like this on top of everything else, and there aren't many ways to reduce the overall bill as your business grows. And finally, number 1, any final guesses? New York. New York has one of the most unusual requirements in the country, the LLC publication requirement. When you form an LLC in New York, you are legally required to announce it in 2 local newspapers, one daily, one weekly, every week for 6 consecutive weeks. This isn't just a New York thing. Arizona and Nebraska have versions of this too, but New York's version is by far the most expensive. In New York City, that publication alone can cost $800 to $1,200. Plus, there's a $50 filing fee on top of that. Add a high cost of living and high minimum wages, and you've got the most expensive state on this list. So, here's the thing. If your state made this list, that doesn't mean you made the wrong call. It just means you need to know what you're walking into so nothing catches you off guard. And if you're still deciding where to file, don't worry. You don't actually have to live in a state to file there. Now, if your business is operating in your home state, you may need to register in both, but for a lot of business owners, especially those running online businesses, filing in a low-cost state can save you a ton of money. At Northwest Registered Agent, we file in all 50 states. So whether you're in New York navigating the publication requirement, or in California dealing with that $800 franchise tax, we know what's coming and we'll help you handle it. We broke down exactly which states are the cheapest to file in and when it actually makes sense to do it. That video is right here. What's the biggest business challenge in your state? Drop it in the comments and subscribe if you want more of this.